It is Fed Day, as we've talked about for the last several days. Is the Fed concerned? Is the Fed scared? We will know in about 3.5 short hours. We're going to get into the more important part. We're going to talk about what might break first. I do believe that rate cutting cycles are never one and done. So I will highlight several things that I will be looking for because, frankly, folks, I do not know if this is the reignition for inflation. I don't know if this is validation that the economy is crumbling, but I do know, I shouldn't say I know, I suspect that something will break. There will be unintended consequences. And we're going to highlight 1, 2, 3, 4, 7 of them that I will be looking at first. But first, folks, I want to make a super big announcement. Really, two things. Um, I don't know if you know this, but when you're a YouTube creator, you get all of these kinds of YouTube analytics. And one of my YouTube analytics is channels your audience watch. And for the last 5 years, I have been looking at the top 15 channels that my audience watch, that you also watch. And for the longest time, my top 15 list was about half doomers and crash bros. I want to thank all of you because you have been purging doomers and crash bros. And I'm going to actually read the top 15 channels that all of you are watching, and none of them, yes, folks, zero doomers, zero crash bros. Starts off with the uneducated economist. Simon, good news. The top channel that all of you watch will actually be going live inside school Sunday morning. So come talk to Simon. Come ask Simon questions. He is going to be there for you. Number 2, Dion. Dion Talk Financial Freedom is channel number 2. And as you know, in about 30 minutes, Dion and Matt and I will be going live again inside school. So you can ask Dion, Matt, or all of us questions. Next up, we have Robuilt. Robuilt is a channel I don't know much about, but Coach Carson did make an introduction. I don't know if that's going anywhere. He didn't follow up, but hey, we tried. Jason Walter. Jason Walter is a real estate agent out of Sacramento. Great news. He and I recorded a podcast yesterday. So hopefully that will be up later this week. Next up, the David Green Show. After that, On the Market, followed by Ryan Pineda. Ryan Pineda been on his show a couple of times. He's been on my channel as well. Then we got the Rate Update with Dan Frio. Jason Hartman. Jason Hartman has been on the channel. Next up, Bigger Pockets. Folks, I don't know if you know this, but the one and only Dion made a connection with Misty for me. And just this morning, within the last 2 hours, Bigger Pockets Money has published a podcast with Misty and I. The title is Rebuilding Financial Freedom After Losing 80% of Your Net Worth. Do me a favor, folks, go check out Bigger Pockets Money and give it some love. Maybe if we're lucky, we can get one rental at a time on the main channel. Wouldn't that be fun? Go back and look at Michael Zuber 7 years ago and today. And I may have mispronounced it as Mindy. I may have said Misty. It's Mindy. Shout out Mindy. After Jason Hartman, or after Bigger Pockets, we got Pace Morby. Obviously, Pace Morby just did a 2-hour deep dive with Dion and I, and Matt and I, was awesome. Real Estate Rookie, Coach Carson, who's obviously a Tuesday guest of the channel, Jeb Smith, Southern California, and finally, Life Worth Living. Folks, there is not a doomer on the list. You have no idea how happy I am because we are finally moving on from fear. We are taking ownership. We are doing the work. It is never easy, but it is possible. And that just makes my heart flutter. All right, back to what we are really here for. Let's talk about things that I will be looking for now that the rate cutting cycle starts in just about 3 hours. Number 1, will this continue to accelerate the refi boom. Folks, it is Wednesday. That means we get the mortgage app data. And folks, it is a good number. Weekly mortgage demand up 14.2%. When you break that down, refis up 24% week on week. Refis are up 127% year on year. Folks, I want you to remember, I told you a refi boom was coming before it happened. I will take credit for nailing that and getting that right. Not only was refis up 24%, but damn it, purchase applications are up 5%. They are down slightly year on year, down 0.4%. The average rate, according to Mortgage Business Daily, is 6.15%. We are at a roughly 18-month low. It will be interesting today, folks. One of the things that I've said, and I believe, if the Fed cuts a quarter, only cuts a quarter, mortgage rates go up. And we'll do that at the end of the day. Fed cuts, mortgage rates up. We'll see if I'm right. The Fed cuts 50, mortgage rates may tick down ever so slightly. Next, will this rate cycle, will it happen fast enough? Will it happen in enough size to have small business lending take off? We have talked about for 18 months now how the commercial banking sector has basically been turned off to the small and medium. It is only the behemoths, the folks with publicly traded stocks and bond ratings, that can go get capital. All the small fish have been starving. Is this rate cycle enough to reignite that? Next, will commercial banks, who have essentially been out of the game, come back? Next, will extend and pretend finally be over? Folks, one of the things that could happen is with the rates lowering, the spread or pain, the pain in extend and pretend may be reduced, where there is enough balance sheet reserves for bad debt that extend and pretend is actually killed, and we actually start having transactions, foreclosures, and the like. Will the stock market be crushed with earnings expectation? Will we see multiples come in? Will we see the deployment of dollars on capital equipment? One of the things that we need to understand, when rates are high, people don't buy capital equipment because the return may not be enough. But as the expected return or cost of capital goes down, maybe, just maybe, we will start deploying capital for capital equipment. And then finally, probably the biggest question I have now that we are in a rate cutting cycle is what happens to all the cash in money markets, in CDs? What happens to all that dry powder? I don't know about you, but I have, let's just say, a tidy pile collecting 5% in some CDs and money market accounts. And if that comes in meaningfully, when do I start to deploy capital? I think there is roughly $6 trillion in money market accounts. And folks, if we have that $6 trillion and we start having a cash out refi boom, could we just have a no landing? I don't know. Again, as I started this, I don't know if this is a sign that a soft landing and growth is ahead of us, or that the economy is on an epic cliff like Wile E. Coyote and it's just going to crash to the ground. But it is going to be fun to watch. So again, folks, a lot of stuff coming today. Again, remember, not only do we get the rate decision, is the Fed concerned or scared, 25 and or 50, we will get the dot plot. And I would actually tell you the dot plot, the what do they call it? Summary of Economic Projections, SEP, Summary of Economic Projections. I'm going to tell you that I think that's more important. Why? Because this is just a single event. The dot plot will tell us, or at least guide us to the future. For example, how many cuts in 2024? I want to know that, don't you? How many cuts in 2025? I want to know that, don't you? The market is expecting 10 rate cuts between now and the end of 2025. Will the Fed agree? Disagree? I don't know. The dot plots will tell us. Also, the Fed will tell us in the dot plots what is their expectation for unemployment. They were clearly caught off guard when the unemployment rate spiked to 4.3. It did come back to 4.2 because their last dot plot, I think, had a peak unemployment of 4.2. What about GDP? I think the last time I checked GDP now, it was forecasting a 3% for the quarter. What do they see going into the future? And then finally, inflation. I don't know if the Fed will come out explicitly and declare victory on inflation. In fact, that would be foolish and dumb, so I doubt they do it. But the dot plot will tell us, is the inflation battle behind us? Again, that will be very, very interesting. Then, folks, my mind goes to the bigger picture. If the U.S. gets in a rate cutting cycle and the dot plot forecasts a lot of cuts, remember, folks, things will start to happen immediately. Immediately. What happens in the currency market? Well, perhaps the dollar weakens substantially. If the dollar weakens substantially, what happens to the yen carry trade? The Japanese yen carry trade. Does that blow up again? Do we revisit that? Does a weakening dollar force the ECB, the Central Bank of Europe, to cut rates? Does it force Canada to cut rates again? We could be on a central bank rate cutting cycle across the world as countries look to weaken their own currencies. This is going to be interesting. Folks, I do want to stop here and recognize three people joined school yesterday. Folks, the school community is growing. It is stupid value. It has multiple accountability groups and education. The community is growing. You have to join. You have to join. I want to congratulate Doug, Logan, and Such for joining yesterday. Again, folks, if you do join today, remember, if you join in the next 20 minutes, you could be a part of Matt D and I's school session. If you join later today, please join the accountability group. It is Wednesday, so Frank will be kicking off the accountability group. Get in the group, ask questions, meet people, introduce yourself. School is where it is at. You will not be disappointed. Hey, it's $20. If you don't get any value, cancel at the end of the month. So again, shout out Such, Logan, and Doug. Market currently is pricing in a 66% chance of a 50% rate cut. Again, it will be interesting to see where this goes. Again, I am most interested in the dot plot or summary of economic projections. Wow, I need some more coffee. We did get housing starts today. What's going on in the housing market, folks? We had rates come down. So guess what? Rates matter. Rates matter. Housing starts last month was 1.238 million. Expectations was for that to go up to 1.318. Actual 1.356. So, folks, the expectation with growth, and they beat growth. Now, remember, folks, when we get housing starts, you have to step back because you get a single family and a multifamily or commercial number. 1 through 4, 5 and above. Excuse me. 5 and above. Down. All the growth was in the residential part of the economy. Residential was stepped up. So again, that's where we're seeing growth. Hopefully we're seeing first-time homebuyer homes and all of that. What about permits? What about permits? Permits are one of those leading indicators that show you what builders are thinking. Again, last month, 1.396. Expectation, small growth, 1.41. Actual, 1.475. Again, a beat. We are seeing, in my opinion, the signs that a rolling recession will be what is called 6-9 months from now. Why is that? Again, 2 months ago, I said mortgage refi boom was coming. It is happening right now. We are seeing the mortgage industry slowly build out of a depression. Home builders tanked as rates were higher. We are now in a rate cutting cycle. They are feeling better. Could we see more building coming, specifically in residential, not multifamily? These are signs that a rolling recession is out there. Again, we might not go negative, but it certainly will be below trend growth. Then finally, I want to shout out a JP Morgan strategist, Oksana Arnova. I think she said the quiet part out loud. This is something that I had believed for a long time. You know that I was calling for a November rate cut not September. I was wrong. I've admitted that already. She said the U.S. economy is strong enough that we do not need Fed rate cuts. Again, folks, if you believe the numbers, we have 3% GDP growth. We have inflation falling quickly. According to latest inflation reading, it could be as low as 1.6%. We have unemployment below full employment, which is 5%, currently sitting at 4.2. We have retail sales that surprise to the upside again. So, again, just looking at the numbers, and yes, you can say the numbers are hocus pocus and they're made up and all of that, but hey, they are what they are. I think Oksana is right. The economy on the surface appears to be strong enough not to have rate cuts. And that is why that statement, that feeling is exactly why I believe a 50 basis point cut today is a sign that the Fed is afraid. Again, I'm not sure I believe all these soft economic numbers saying we're all good. I don't think that's right. I think the economy, certainly the job market, is a lot weaker than the surface level numbers. But we will know in 3 short hours, is the Fed concerned or is the Fed afraid? And with that, folks, we will close out the daily financial news. But before we do that, we've got to congratulate 2 people. 2 people got their golden tickets, their first deal. Lewis, congratulations for getting your first deal. And Nader, congratulations for getting your first deal. Your cards will be going out in the mail. Folks, if you don't know what we do here at One Rental at a Time, I want to give recognition for the folks that do the work. If you get your first deal, you'll get what's called a golden ticket. You can only ever get one of those. If you get multiple deals, and many people have, we will go ahead and ship you what's called a black card, and you can collect as many of those as you would like. Again, folks, don't forget, join school. In the next, 13 minutes, we'll be going live with Dion and Matt. Later today, you'll have an accountability group. Sunday, you'll have Simon. And just to tease it, Monday at 8 a.m., I am trying to line up Taylor from Life Goal Investments. Again, Taylor from Life Goal Investments is a 10-year Wall Street veteran. He runs a company called Life Goal Investments. I think it'd be very interesting for you to get the chance to ask a Wall Street insider some questions. So again, I'm trying to lock that down with Taylor. Hopefully that happens. Fingers crossed. I will see you soon. Take care. Like, subscribe, comment. Do me a favor. Go watch Bigger Pocket Money, Rebuilding Financial Freedom after losing 80% of his net worth. Mindy, thank you for the opportunity. Bigger Pockets, thank you for the opportunity. Leave some comments, likes, and whatnot. I'll try to respond. Later.